Good morning. Welcome to Stock Market Today. It is Thursday, April 16th, 2020, and I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email to follow along with this show, as well as get daily stock ideas that hit your inbox every trading day before the market opens. So let's dive right in now. U.S. equities finished lower on Wednesday with all sectors closing in the red. Healthcare was the least bad of the bunch, while energy led to the downside. Treasuries saw good gains with the curve flattening. Dollar was stronger on the major crosses. Gold was down 1.6%. WTI crude down 1.2% to close below $20 a barrel for the first time since 2002. As we get to the desk this morning, a little bit of a rebound. Futures up about 0.5%. Asian markets were mostly lower overnight, with Japan lagging. European markets are trading higher. Treasuries are mixed, with the curve flattening. The dollar is stronger on the major crosses once again. Gold is up 1%. WTI crude is up 1.8%. And for the structure here, we're dancing with the 50% retracement level. We've been highlighting it for a little while. I do think it is within a zone of resistance here for the S&P 500. If we break through there, you're looking at next levels at around 2,900 to 2,950, which holds the 61.8% retracement level. In the near term, using a 13-day CCI and a 3-day moving average of that metric, we do remain overbought. So overbought in the near term following this strong rally off the March 23rd lows. Chaikin money flow is bullish and is thus far holding above that declining trend line that we've been highlighting. So overbought, right? Money flow bullish. So indicators are mixed, kind of dancing with this key level at the 50% retracement mark. We've mapped it out for you here. I think should we break lower, initial support is at 2650 and then 2450 below that. You can still get a sense of what kind of volatility we're dealing with as the chandelier exit set at 3 standard deviations is well below last sale for the S&P 500. So still very much a volatile environment. We're in a 40 VIX environment, and if you kind of figure out what a 40 VIX means for the S&P 500, it's roughly 2.5% moves plus or minus every day that the market is pricing in. And lo and behold, we were down about 3% at the lows yesterday. Looking at our market in a minute now, what are we talking about in the note today to Chaikin Analytics clients? Well, we just touched on the rally pausing around the 50% retracement level. Breadth metrics continue to improve, albeit slowly. They are improving, at least for the intermediate and longer term. Foreign stocks remain under pressure. Biotech could present an opportunity. We'll map that out for you. And futures, as I said, do point to a higher open here today. Now let's shift over to the power bars for the major indices. The Dow lost 1.9% yesterday, 3 to 8 bulls to bears there. S&P 500 down 2%. 35 bulls to 152 bears there. NASDAQ was an outperformer once again, 16 bulls to 25 bears. And small caps were an underperformer once again, 138 to 427 bulls to bears. Big rally in the bonds sends yields lower according to the Chaikin Power Bar. Small cap stocks and large cap stocks are bearish. No stock of the day today. We're running with a screen of the day. We've been talking a lot in our notes about different time frames for different trends and kind of knowing yourself. What kind of investor are you? Are you a short-term trader? Are you a longer or more intermediate-term investor? If you're a short-term trader, the trend in the market is up, and that's the trend that you care about. So with markets all overbought here, right, whether we're looking at the SPY, the IWM, the Qs, they're all overbought by our work. But if the shorter-term trend was to continue, we want to be prepared for potential opportunities. So what I did was I screened Chaikin Analytics, the Russell 3000. I screened for very bullish, and neutral plus stocks that have bullish technicals, strong relative strength, and are above a rising long-term trend line. And that screen this morning returned 36 names. These are 36 names, and they're not go out and buy them now. These are 36 names that you should do more work on. You can add them to a watch list, look at the technical structures, watch if they're overbought, oversold, and if they continue to make sense, they may present some opportunities there. Some of the names that jump out at me, EA, some of the managed care names, obviously Microsoft, Fortinet in the software space. Eli Lilly is in the healthcare space, as well as Masimo, stocks that are acting well. So these are names that you can add to a bullish watch list as you continue to do work and stay engaged with the market despite all of the volatility. in both directions over the past couple of months. So I'll run these screens from time to time. I get a lot of good positive feedback on them. Wanted to share it here with everyone today. Turning now to our sector tracker, the movement of the major sectors over the last 5 days. Discretionary at the top of the list. Thank you, Amazon. Comms and the number 2 slot. Thank you, Netflix. Staples, still a defensive group, holding up well, as is healthcare and technology. Utilities are middle of the road, still positive. REITs, materials, industrials, fins, and energy, all down over the last 5 days of trading. And there's that trend in energy reasserting itself. Obviously, lower rates are a headwind for the financials, and the earnings reports out of the banks so far, in my opinion, have been worse than feared. So those two groups remain under pressure. Industrials obviously tied to the global economy, as are materials, and we're slowing. There's no two ways about it, right? Maybe even contracting. So there's going to be some bifurcation in the market right now. It's large cap growth that's leading the way. In particular, our view in a slowing growth world, you want to pay attention to growth. We touched on that yesterday. In my opinion, nothing's changed there from a trend perspective. Turning now to our industry in focus. E&P, oil and gas exploration and production. Yesterday we looked at services. Today we'll look at E&P, which is only slightly less of a disaster than what we looked at yesterday. Over the past 6 months, E&P, XOP is the ticker symbol there, has underperformed the S&P 500 by 45%. Power bar ratio, which measures future potential, is very weak, 32 bears for 1 bull. It's currently ranked number 16 of 21 subsectors, and it's moved down 1 slot over the past week. So the names here we want to definitely avoid. We want to avoid the group in general, but maybe even look for opportunities on the bearish side if you do trade that way. Tellurian, TELL, Hess, HES, and Northern Oil and Gas, NOG, all have very bearish Chaikin power gauge ratings, and there's the chart. And again, as I said yesterday, this is not a new development, folks. This has been happening for over a year. The underperformance has been pervasive across this industry group, across the energy sector, and it's been in place for a year, right? It wasn't price wars. It wasn't COVID-19. This trend has been in place. Those elements accelerated the trend to the downside, but the trend has been there. Okay, you can see the underperformance towards the bottom of the screen. You can see the power gauge rating. The ribbon at the bottom of the screen tells you we've been mostly bearish for the past 12 months. Look at Chaikin money flow, just under persistent distribution, right? Big mounds of red here. Big, intense, extreme readings to the downside. This is a group that's under pressure. It remains under pressure. I don't care if it rallies from 30 to 40. The trend here is down, and the fund itself is currently overbought. So just something to keep in mind as you're doing your work. If you're thinking about going bottom fishing in energy, look, maybe you see some opportunities for mean reversion. I think the trades have to be quick scalps in and out because this trend is down. And there is nothing that I see taking a weight of the evidence approach that leads me to believe that that is going to end anytime soon. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. United Healthcare, revenue and EPS beat expectations, and they maintain their guidance. So that was enough to send that stock higher by 4% on a down day. Centene, part of the same group, so it goes along for the ride. CNC, notice that both of those stocks are very bullish. Centene up nearly 4% on the day. Market Access up 3.9%. Didn't see anything company specific there to drive trading in this neutrally rated stock. Gaming stocks had a good day yesterday. Activision up 3.84% to trade at a 52-week high. And if you go back to the screen that I showed you earlier, you'll see that one of its peers, EA, is a name on that list. So obviously that group is one that maybe makes sense to pay attention to here in the next few days and potentially look for opportunities. Boeing rounds out the list of gainers. Compensation agreement with one of their customers regarding orders around the 737 MAX sent that stock higher by 3.53%. On the loser side of the board, Phillips Van Heusen, some profit taking after a big run last week. Takes 11.75% out of that stock. Helmerich and Payne, part of that oil services group that we highlighted yesterday, down 11%. L Brands, nothing company specific to drive trading there. L Brands, it's consumer, retail, etc. Down 10.3% as stores do remain closed. LNC, nothing company specific there, down 10.3%. And LyondellBasell, LYB, down 10% following their earnings announcement. And I will note that the stock did catch a downgrade here this morning. Ticker symbol LYB, downgraded this morning, has a bearish rating at Shaken Analytics. Let's dive into the chart. Breadth metrics slowly improving, right? And we're looking at the intermediate and longer term trends here. The percentage of stocks in the S&P 500 currently above their 200-day moving average stands at about 19%. So, it's encouraging. We're coming off the big lows, not enough traction there yet, in my opinion, given the move that we've had off the lows, but slowly improving. And to the extent that this metric continues to improve and doesn't start to roll over, that increases the odds that the near-term trend will continue higher. Same with percentage of stocks above their 50-day moving average, right? Currently stands at about 24%. We'd love to see this get back above 30. To me, getting back above 30 is an indicator that the move higher in prices is more likely to continue. So taking a look there, we're not quite there yet. Kind of touched the level yesterday before pulling back with yesterday's down move in the market. Now, what I will say is the percentage of stocks above their 20-day moving average remains elevated. It remains over 90%. We touched on this last week in the show when it was over 95%. Generally speaking, near-term trading can get a little bit choppy in that environment, maybe a little bit of an element of too far, too fast when thinking about that big move. 2 weeks ago, that metric was at 15%, and then last week it was at 95%, following the strong move higher in the markets across the board. It's just something to keep in mind in the near term. Different trends at play, right? Short-term trend is up, but likely extended. Intermediate and longer-term trends, in our view, continue to remain down. And it's not just our view. They're below the 50-day, markets below a declining 50-day moving average, right? Markets below a declining 200-day moving average. Those are intermediate and long-term measures of trend, and we're below them, and they're declining, right? So the intermediate and long-term trends are down. If you're shorter term, if you're looking at the 50-day moving, the 20-day moving average or an 8-day moving average, those trends are up and we're above it. So, know your time frame. It's really important. Biotech could present an opportunity here. Taking a look at the IBB, the iShares NASDAQ biotechnology ETF. What I will initially say is that, from a Chaikin perspective, as you know, we rate the ETFs. NASDAQ Biotechnology ETF has a very bullish Chaikin Power Gauge ETF rating. Now, it is overbought here in the near term. This is not a call to run out and chase biotech. However, look at the 50-day moving average. Look at the 200-day moving average. I think if you see a pullback into this kind of 110, 112 area that alleviates this overbought condition, to me, that then sets up an opportunity for ETF investors to start thinking about adding something like IBB. Taking a look at IBB relative to the S&P 500 at the bottom of the chart there, SPY, you can see a clear breakout. It's been an outperformer, throughout this bear market, and we're knocking on the door of 52-week highs. So I think that something like biotech could present an interesting opportunity. If you're going to drill down on the individual names, I always think it makes sense to know the story, know what's going on, know what the potential catalysts are coming down the pipeline that could potentially impact the stock, especially with the smaller biotechs. But if you're just looking for broad exposure to a group that's in a leading sector of the market that's also outperforming, I think you want to be paying attention to a fund like IBB. And then we'll wrap it up with foreign stocks, which remain under pressure. Here's the ACWI ex-US ETF rallying back. Notice it's not at its 50-day like the SPY, or at 50% retracement or 62% retracement like the Qs. It's struggling with its 38% retracement as it's overbought, and we're getting a new breakdown relative to the S&P 500. So when thinking about structuring a diversified portfolio, I still think it makes sense to have it more weighted towards the U.S. That's going to wrap us, folks. Head over to chaikinanalytics.com/test drive. Sign up for that free 14-day trial. Have a great Thursday. I'll be back tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.